Good morning. Welcome to the next webinar organized by PwC. My name is Sebastian Lebda, and I am the director of the transfer pricing team in Warsaw, in Poland. And I will run this webinar together with my colleague, Piotr Niewiadomski, who is a senior manager also in the same team. The title of the webinar for today is The Last Call to Prepare the Transfer Pricing Documentation. The purpose of this webinar is actually to remind you about the new documentation requirements which came into force in Poland as of 1st January 2017, and also to make you aware that there is less and less time to prepare the proper transfer pricing documentation. Maybe a quick look at what is formally required under the new requirements as of 1st January 2017. As you can see on the slide, there is a lots of new items which historically have never been either submitted or prepared. Historically, the taxpayers in Poland were obliged only to prepare the local file, which is point 1a. Now, under the new law, we will need to submit also the local file, but the content will be extended compared to the content of this local file in the past. And basically, the local file, as you may know, is a kind of a description of transaction flows and how the local entity is operating on the local market. Now, the local file will have to be extended with the benchmarking studies, which historically, again, have never been formally required. The benchmarking studies have to rely, where possible, on local comparables and should be prepared in cases where the level of the revenue or the costs of a taxpayer exceeds 10 million euro. Both local file and the benchmarking studies, which effectively constitute formally a local file, will not be submitted by the taxpayer, but the taxpayers will need to submit a taxpayer statement. And this statement, for the first time, will need to be submitted 3 months after the end of the financial year. So in majority of the cases, it's gonna be the end of March 2018. The statement will simply include the sentence, and somebody needs to sign the statement that the company has the required documentation. So, in a nutshell, you will need to prepare local file and benchmarking studies if you exceed certain thresholds, and you will keep it in your files and wait for the request of the tax authorities. But apart from that, you will need to submit the statement at the end, within the 3 months from the end of the financial year. Apart from the local file, benchmarking, and the statement, there is one additional element. This is element number 4 here. This is a master file. The master file is the documentation which is typically prepared by the head office, by one of the entities in the group. And this has to be submitted by the company which will be appointed within the group, but this has to be delivered to the local entity if the local entity in Poland is not the one who will be preparing this. Now, not having the master file means severe consequences for the local taxpayer. Local taxpayer has to have both local and master file. Not having the master file means that tax authorities can apply 50% corporate income tax rate on any assessed income if the documentation is not complete. Now, apart from these documentations, the taxpayer will also need to submit CIT-TP form. This is basically a form which includes a description or actually a list of transactions concluded with group entities, and also some additional information on the profile of the entity, on any restructurings that have taken place. And this form will need to be submitted if the company exceeds 10 million euro of revenues or costs. Apart from that, as you may know, there is also a requirement to prepare country-by-country report. In majority of the cases, this is a requirement which will be on the entities which are abroad, because in Poland you have very limited number of entities who are consolidating the group financial results, and this requirement applies to those groups whose consolidated revenues exceed 750 million euro annually. If we don't prepare country-by-country report, the local entity will need to prepare or actually submit a country-by-country notification. It's a notification about which entity in the group is formally required to prepare CBCR report. Now, we know what is formally required. I think one of the key information that you also need to consider is that the scope of what the local Polish taxpayer has to prepare depends on the level of the revenues or costs of this taxpayer. And as you can see on the slide, it can be as little as only local file, country-by-country notification, and taxpayer statement that he has a local file if the revenues of the local Polish taxpayer or costs are between 2 million euro and 10 million euro annually, but can also be as high as you can see on the right side of the slide. This can also include benchmarking studies, also CITP for master file, and obviously if we have a consolidated entity, it can also include CBCR. So, I mean, in the first step, you really need to define what is formally required for your local entity. Now, apart from that, when you already know what you have to prepare, you also need to look at what transactions have to be documented. And the principal rule here is that for transactions, basically, the threshold changes depending again on the revenues of the local entity, and the minimum threshold is 50,000 euro, and the maximum is 500,000 euro. Now, this threshold does not apply to situations where you have transactions with tax havens, or if you have a specific joint venture agreements or other types of comparable agreements. Despite of these thresholds, also the tax authorities can request specific documentation for transactions below these thresholds, but this is on a specific request of the tax authorities, and then the taxpayer has 30 days to present it. Whereas this standard documentation has to be submitted within 7 days upon request of the tax authorities. So what you need to remember, you need to make 2 steps. In step 1, you need to define what type of documents the local entity has to prepare or submit. And in step 2, under the local documentation, you need to define which transactions, which events have to be documented. And then at least you have a starting point for preparation of your documentation.
And now we would like to guide you through or walk you through the process that we designed to make sure that all taxpayers meet the statutory deadlines and know what to prepare and do not miss any important dates. As Sebastian mentioned, the first step, the preliminary analysis that we propose to conduct, can be done as of today. Actually, you can conduct the first and second step. So you can check, first of all, what elements of TP documentation you are obliged to prepare, and secondly, what transactions should you should describe in the local file. These 2 elements could be decided based on financial statements for 2016, and you can actually do it right now. The next step that we propose to conduct is communication with the group, with multinationals within our capital group, and we always propose to check whether the group is working on the master file to make sure that what we are doing here locally is consistent with what the group is preparing. And secondly, some of the documents that are required locally might be to some extent prepared at the group level. On the other hand, what is prepared at the group level may not necessarily meet all the local TP regulations, as these are based on the OECD regulations, but they are not copying the OECD regulations exactly. So there are some local Polish-specific peculiarities, which should be taken into account while preparing master file, benchmarking studies, and of course, local file. So if we communicate with the group, we can upfront inform what should be prepared in Poland, what are the critical requirements, and how to address them, working together on the TP documentation. Once we do these first steps, we can then move to preparing the documentation itself. First of all, we would propose to start with the local file, as this is something that many taxpayers has already prepared for previous years, so you can build on that. At least you have some initial information prepared for previous years, and you can extend them with new requirements. The first hard deadline that appears and is visible also on this slide is 31st of October, where country-by-country notification for financial year 2016 must be submitted to the tax authorities. So if a capital group, a multinational group falls under the country-by-country reporting requirement, then its Polish subsidiary must submit notification to the tax authorities by the end of October, stating who actually files this form and in which country it will be submitted. Then we would like to move to the second part of the year. The next hard deadlines upcoming are fall on 31st of December, and these again are linked to country-by-country reporting. First of all, you need to file the actual form for 2016, for financial year 2016, and then you also need to notify who will be preparing and who will be submitting the form for 2017. So here the deadline is much shorter than for 2016 because it's actually the end of financial year. As Sebastian mentioned previously, we of course assume the most regular case here, where the financial year is the same as the calendar year. If there are any exceptions, the deadlines may also be shifted as appropriate. After we end the financial year 2017, we actually have 3 months to make sure the local file is absolutely complete and contains all necessary elements. So this is the time where we should intensively work on all the locally required TP documentation elements, because on 31st of March, as you can see on the slide, we have another deadlines. First of all, taxpayers will need to submit a statement that the local file is completed and is available at the company's premises. The local file does not need to be submitted anywhere, but the taxpayer must declare that it is ready. So submitting any false statements or not submitting the statement at all falls under fiscal penal code, so it cannot be ignored or in any way misinterpreted. So this is a hard deadline that we would like to underline here. The next thing you will need to do on 31st of March 2018 is to file CITTP form, which is a specific form designed to help the tax authorities select entities for tax audit. And this form will need to be submitted alongside the annual CIT return. So as you see, end of March has many deadlines. What about the next month after this this first quarter? Can we forget about transfer pricing? Not really. You still need to supplement the local file with financial data from annual financial statement after it is after it is signed and finalized. So the taxpayer will have 10 days to submit relevant financial data from the financial statement into the TP documentation. This is another hard deadline here. You may have actually noticed that we didn't refer to the deadline for preparing master file. because it is not stated clearly in the law what the deadline is. It actually depends on circumstances of each specific capital group. So first of all, each multinational group will need to decide which entity is responsible for preparing the master file, and then the deadline is actually the same as the deadline for submitting the annual CIT return by this entity. So it will be specific for every single taxpayer. If you would like to learn more about the transfer pricing requirements, you can refer to our previous webinar. We have put a link on this slide. You are invited to see it. You will see more details on what specific requirements in Poland are. And as of today, this is all we wanted to share with you. Thank you very much. It was nice to see you here on our webinar.
Thank you very much.